Life is not something we can put a value to. Actually, life is priceless. So the work of a term insurance plan is only to provide your family adequate financial protection in case of your early demise. And to do this, you need to have a plan which is robust and efficient. Hi everyone, this is Nidhi and welcome back to our channel. There are many term insurance plans available in the market right now. So how do you decide which one is best suited for you? In today's video, we are going to discuss everything you need to know before you even start searching for a term insurance plan for yourself. First things first, how do you decide how much cover do you need? Well, there is no fixed formula for this, and that is why it becomes a daunting task for many. The most popular option in India is to have a cover of rupees 1 crore, mostly because it is an aspirational figure and sounds like a magical number to many. But truly speaking, it may not be enough for you. So let's go a little deeper and try to find out what your term insurance needs to do in case you are no more. Number one, your family might need money to manage their monthly expenses till the time your kids become financially independent. And this could well take 15, 20 or even 25 years from now. Add to this all the liabilities which you need to pay like your home loan. This could be a big chunk of amount and you would not want to burden your family with this amount of money. Plus, you would also want your term insurance to cover any one-time huge expense like your kids' education or even marriage. This list could be even longer depending on your current personal financial situation. So in that case, talking to a good financial advisor can help you a lot. He would handhold you and guide you to find your recommended cover amount. And if you still want to do it yourself, we at Algates Insurance have devised a simple calculator which can do it for you. All you have to do is go to our website www.algatesinsurance.in and check out our term insurance calculator page. Just give us a few simple inputs and the calculator will give you your recommended cover amount. Once you have decided on your cover amount, you need to check for how long you need to be protected under your term insurance policy. This will decide the term of your policy and even the premiums you need to pay every year to remain covered. We recommend you to take a policy which covers you till you turn 65. By this time, most likely your kids would have turned independent and will not depend on your monthly income for their financial needs. And also you would have accumulated enough corpus to take care of your and your spouse's retirement. If you think that you can achieve this by the age of 55 or 60, go and choose your policy duration accordingly. But if you want to take a cover till you turn 80 or 90, you can do so as well. This way, you can leave a legacy for your future generations and there is nothing wrong in doing it. But please know that this is not a very efficient method to do that as your term insurance cover might become very expensive. Now that you have arrived at a cover amount and policy duration for yourself, what you need to do is find out a plan which is robust and efficient. And by robust and efficient, I mean you need to find out a term plan which provides financial protection to your family when they need it the most without any hassle. Of course, you would not want your family to run from pillar to post to get the claim settled. And this brings us to the most important aspect of your term insurance policy, which is your term insurance provider. Yes, you need to choose your term insurance provider wisely. Ultimately, it is your life insurance company which is going to pay your claim and provide for your family's financial sustenance. And here are a few factors you need to look at when you are choosing your life insurance provider. Term insurance is a very long-term contract which lasts for 30, 40 or even 50 years, and it provides you a huge coverage in exchange of small yearly premiums which you pay to your company. You need to have a term insurance provider which you think would survive that long to honor its commitment. So the stability of the company becomes the most important factor. And the stability of business of a life insurance company can be decided by its past record, the number of years it has been in business, and the quantum of premium it has been writing year on year. I would personally recommend you to go with a company which is in the top 3. Apart from this, another important factor you need to check is company's operational metrics. These operational metrics decide how good your company is in settling claims. The first one is claim settlement ratio. This is the number of claims settled by a company per 100 claims received by it. And just past year's record is not enough. Take an average of last 3 to 5 years numbers. Any number above 98 or 98.5 is good enough. But do not stress too much if two different companies are showing numbers of 99.2% and 99.4% respectively. Use this factor wisely to filter out those life insurance companies which are not efficient in settling claims, but do not consider it as the most deciding factor when you buy a term insurance plan. You can also check out amount settlement ratio, which indicates that if the company is more stringent in settling high value claims and settles lower amounts more easily. Since your term insurance cover is usually of a huge amount when compared to death benefit or maturity benefit in a money back policy, this is also an important factor. Now let's discuss rider or add-on benefits. These are extra benefits which are available at extra premium. The most important one is critical illness rider, which provides you a huge lump sum in case you are diagnosed with any of the illnesses listed under the plan. Important word to note here is listed because this rider only covers illnesses which are listed under it. So if you are willing to add this benefit to your base policy, look for a rider which covers a good number of critical illnesses. This is a living benefit since you get the cover amount if you survive for 30 days post the diagnosis of your critical illness. While it is desirable to have a wide range of critical illnesses covered under this rider, please know that this can make your rider really expensive. Accidental death benefit is another rider which you can add, and it provides extra protection in case of an accidental death. This is a great way to enhance your cover by paying very little extra premium. Another good option is waiver of premium rider. Add this rider to your base policy and you need not pay any further premiums in case you are disabled or get critically ill. Your insurance company pays all the future premiums and your base policy remains active. Different insurance companies offer different variants of this add-on. Some provide this benefit only in case of disability while others cover critical illness too. Some cover only accidental disability or illness while others cover naturally occurring ones too. You need to check out which one is more comprehensive, as this is a good add-on at a decent price. Now, underwriting is also an important aspect you need to see. What information you need to provide to your insurance company and how long does it take for your insurance company to process your application. The most basic information you need to provide is your personal information, medical history, income details, tobacco consuming habits, and other lifestyle habits. Make sure you do not hide any information here, even intentionally or unintentionally. Your insurer decides to provide you a term insurance cover based on all the information you provide in your application form. Some insurers might even ask you to undergo a list of medical tests to assess your current medical conditions. Sometimes the insurer might also ask you to pay higher than normal premiums in case it thinks that you carry extra risk than others. For example, if you are consuming tobacco in any form, your insurer might ask you to pay premium which is 50 to even 100% higher than the normal rates. A term insurance application process might take anywhere between a week's to a month's time. In some cases, it might even stretch to 2 to 3 months as well. So choose a provider which has a smoother application process. A good insurance advisor can guide you through the process and expedite your application process as well. The last thing you need to check is the premium you need to pay every year to get your term insurance plan. Affordability is an important factor, but many people make the mistake of choosing the cheapest plan in the market. As I said earlier, you need to choose an insurer which you think has the capability to keep its promise in the long run. And that is why you buy a term insurance plan. So choose 2 to 4 plans based on all the factors we discussed till now and then see which one fits your pocket well. And if you still need some help in deciding which term insurance plan is best for you, you can reach out to us at Algates Insurance. We will guide you in selecting a good term insurance plan for yourself and also handhold you through the application process so that you don't have to worry about it. So visit our website www.algatesinsurance.in and book a call with us. You can also chat with us on WhatsApp. You can also DM us on our Instagram or Facebook page. I hope you enjoyed watching this video, and if you did, please don't forget to like, share and subscribe to our channel. I'll see you in the next video, and till then, bye-bye.